Hi guys, welcome to another video. Currently in drawdown at the moment of $900 in loss, and yeah. So got in here at this level. Again, it's a support level here, as you can see. So the market has kind of moved against me a bit aggressively. It's not very nice of the market to do so, such a manner. It's being naughty right now. Could have gotten a better entry, to be honest. Could have waited for this rebound and then gotten in around here somewhere. Would have been a much better entry, but woulda, coulda, shoulda, you know. You're watching Bloomberg. Why can't I speak? You're watching Bloomberg in the background, so just in case you're wondering what's going on. Can't really put on English music in the background because of copyright strikes, etc., etc.
We'll stay on the tariff story because, of course, just in the last hour or so, those additional tariffs have come into place on steel and aluminium, and President Trump's ordered doubling those tariffs on those metals to 50%, from 25% to 50% now in effect. For now, the UK steel tariffs will remain at 25%, so a carve-out for the UK, at least for now.
So take profit is at this orange line at the bottom. The top one is our entry, and the bottom is where we looking to take our profit.
And he's delivering on his promises to bolster our steel and aluminum industries in this country and to protect those jobs. If not for this president, that steel plant in Pittsburgh, Pennsylvania would have closed. Those jobs would have been lost. And the president saved that company, he saved those jobs, and he's saving that community. And that's the intention of the steel tariffs, which he will sign later this afternoon.
Okay, for more, let's bring in Bloomberg's editor, John Herskowitz, for the details. John, what is the rationale that the Trump administration is pointing to for this increase in tariffs from 25% to 50% on steel and aluminium?
As you mentioned before, this was part of the Trump administration's plan to save jobs, protect the industry. But the backdrop of this comes from a deal that
could have gotten a better entry, man.
Works for some time with Nippon
Crapola.
Steel trying to acquire U.S. steel. The Biden administration opposed this deal. Trump also opposed this deal. And on the campaign trail said this was going to happen. But there was a turnabout last week where Trump said that the acquisition would go ahead. I'm sorry, that the investment would go ahead from Nippon Steel, but the company would be U.S. owned, U.S. operated. And as part of the way to make this more amenable for the Nippon Steel emergence into U.S. Steel, Trump said that this announced these tariffs of increasing them to 50%. He also said that the Nippon Steel deal would help with protect U.S. jobs, and that there would be modernization of the steel works for U.S. Steel. So it's against this this political trade issue that's been going on for some time, the change of tack for the Trump administration, and to help this deal go forward.
Just gotta sit through this drawdown, really. Nothing else you can do.
Steel and aluminum industries.
And meanwhile, the conversations.
This is what happens when you get in too early.
Beijing, Washington, we know that President Trump is angling for a conversation, for a phone call with President Xi Jinping. So far, that has not been confirmed. But the Secretary of State for the Treasury, Scott Bessent, commenting and saying that China needs to be a reliable partner. How are those comments likely to go down in Beijing?
Probably not all that well. Beijing has responded with Wang Yi, the foreign minister, speaking to the new U.S. ambassador, criticizing the Trump administration for not going forward, for making it more difficult for the trade negotiations to go forward. Both sides have been exchanging accusations about reneging or hurting the deal that they reached a few weeks ago in Geneva, which helped bring the tariffs down for both. And the idea of a phone conversation has been going on for some time. I think that Trump wants Xi to make to call first. Xi Jinping has shown no inclination to do this. So the two sides are just increasing the rhetoric. They're not getting any closer. And one thing that we've reported on, Bloomberg reported on, is that a lot of Chinese firms,
The
have been preparing for this, trying to
Google
increase
Chrome
the
seems to be
US
playing up a
market,
little bit.
supply chains. The story talked about what the firms are doing to make, after learning from the first Trump administration about the trade difficulties, to lessen the blow this time around. So corporate China is a little bit more prepared for what's coming down the road than happened previously.
Okay, so those are the international divisions between China and the US, and no closing of that gap, at least for now. There are domestic divisions as well. This comes down to the tax policies, of course, and the bill being pushed through the Senate, or at least looked at and scrutinized by the Senate right now. But the criticism coming from Elon Musk, blasting President Trump's signature tax bill as, quote, a budget-busting abomination. This in a public clash with the US leader following his departure, of course, from the administration. The White House downplaying those remarks from Musk. Take a listen.
The president already knows where Elon Musk stood on this bill. It doesn't change the president's opinion. This is one big, beautiful bill, and he's sticking to it.
Yeah, well, Musk does not see it as a beautiful bill. How significant is this split, John?
I think it just represents a falling out between the two of them after the end of Musk's term at the Department of Government Efficiency. Musk made it very clear what he thinks of the bill. And this also reflects the concern of a lot of Republican senators who see this bill as adding several $1 trillion to the U.S. debt over the next decade. And this is something that Musk tried to eliminate with his Doge department, whether the gains, whether the cuts actually
Pork-filled congressional spending
another
bill.
thing. But
Wow.
yeah, we see a division between these two people who were very close a few months ago, now going separate ways. And there's some things in the bill which could hurt Musk's industries, especially Tesla, in terms of support for electric vehicles and the grid to charge them across the U.S. Which might not be a part of the final legislation and could hurt the growth of his company. So two people who were really close a while ago and now going on separate paths and must make the...
I don't think that's the case. Elon actually wants to lessen government spending. That was his point. That's why he got in there, to reduce government spending. No, he didn't care about his company all that much. The best way to do that is to stay out of politics and just what do you call it? Lobby for what you want, which is what all the other companies are doing. The top multinational conglomerates. Too many big words, mate. So I don't think he was in it for his own company's sake, because his company's taken a big hit since he's joined government. So
are the tariffs going to have a small impact, or are the tariffs going to have a large impact? And now we're just kind of we gotta wait and see.
Okay, for more, let's bring in Bloomberg's Valerie Teitel. And Valerie, the comments from Goolsbee there seem to be shored up as well by the data on the jobs front, seem to give more security, or at least more evidence and more support for the view from Fed officials that they are in a position where they can hold and they can wait, because there is still that resilience, it seems, in the labour market.
Yeah, exactly. Those JOLTS data yesterday, again, reflecting that the labor market, at least in the month of April, was quite resilient. There was an unexpected rise in job openings. Also saw hiring pick up in the month of April. But note, this is the month of April. This is when equities was down 20%. There was a huge bearishness around U.S. economic growth. So the market really taking this as a positive that the labor market held up quite well. We did see this really help out the equity market yesterday. The S&P 500 jumped some 0.6%. after this strong data. We're now less than 4% away from those all-time highs in the broader S&P 500 index. But while there was a big reaction in the equity market, we're continuing to not see very much movement on the expectation for Fed pricing this year. The market is still pricing in 2 cuts for the remainder of the year. So there hasn't been a lot of move here, but where there has been some action, Tom, is in options pricing. We're seeing a wide dispersion of bets on the Federal Reserve path changing. Some positioning for no cuts at all in 2025. Some positioning for a series of 50 basis point cuts into the end of the year. And I think this just reflects that there is a thought out there that once the Fed is done,
she's gasping for breath.
further clarity. Once they get that clarity,
It's a lot of work speaking baloney.
Communications to the markets. There might be a big shift in the Fed funds futures after that kind of clarity. We wait for more hard data to come. We do have more on the labor market this week. We have jobless claims on Thursday ahead of the non-farm payroll print on Friday for the
It's an easy job commentating. Taking a position on your opinion is put your money where your mouth is, eh?
Around the Fed. Thank you. Bloomberg's Valerie Totel, of course, walking through the market action.
There's a lot of people in the world that can talk the talk.
On Friday. Here's what to think about later today, though. 9 a.m. UK time, Euro area PMI. The final print will come out.
But only very few people can walk the walk, and they struggle to talk the talk. Exhibit A. How many minutes has it been, and how many fumbles have I done in this video alone? It's crazy. That's why people like me stay in the background. Stick to the shadows. But I have to come out.
Services as a sector is continuing to hold up given the concerns about the economy in the US. You can get
Keep practicing and you get better, little by little. I mean, right now I'm not speaking as fluently as I'd like to, obviously, but I think we can get better and better as time moves on. What do you reckon?
We will join Pretty Gupta live in Berlin, where she's going to be speaking to Permia's Credit's David Hirschman. Focus on
my start is very low energy for some reason, because I reckon I'm already in a trade, and I'm really focused there. So like, I'm not really paying attention to the camera, and then it takes me a while to like get set up because I'm looking at the trade at the same time setting up all the lights and the sound, the camera, and then I'm like, hi guys, how's it going? Welcome to my video. I know how I sound, but I'm not a content creator. I'm not one of those entertainers, influencers that just, hey, I'm a 20-year-old Forex trader, and today we're gonna go in my sports car to the local restaurant, and then from there we'll go to the fitness center, and then we'll end the day at the beach with my girlfriend and buy my course, because that's how you can also live the life I live. It's boring, guys. Trading is boring. The life is boring. You're married to the charts, and unless you can take this office with you, which is what I'm thinking of doing when I go to New Zealand, I might get a caravan, because if you get a house, you'll be stuck to the house, because you have to be at the charts for a long time to wait for the opportunities to show up. Market does not work on your time. You have to sit there and wait for the opportunities to show up and get in, otherwise you miss the opportunity. So getting a caravan, I can just go out and walk about, make some videos, shoot some clips, make it more entertaining. Otherwise, I'm just stuck in front of the charts, really.
Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. It's jobs day, and Bloomberg has
$520 in loss right now. 540. It's coming down, so it should give a strong push to the bottom, and we'll exit with our profit. We won't stay in it for too long. As always, get in, get out. Strong push to the bottom coming, and once it shows up, adios amigos. Take it and run. Just take it and run.
Welcome back to Bloomberg Daybreak Europe. Now, South Korea's new president has pledged to revive.
Oh, South Korea has a new president? Well, who was the old one?
Chaos spurred by his predecessor's martial law declaration back in December. Take a listen.
Yeah, I heard something about that. Martial law in Korea.
I will begin with restoring
알았습니다.
and reviving the economy. With the mindset of fighting against a decisive battle against the recession, I will formulate
There's so much corruption in Korea, man. It's crazy.
funding economic catalyst. We will restore the virtuous cycle of the economy.
They live quite a pretentious lifestyle, but they all know it's pretentious. But I think they can't escape it for some reason.
By the new president, lifting stocks in the session today. The Kospi is up 2.5%. The economy, of course, of South Korea is challenged. They have the conversations with the Trump administration around trade and potentially as well reaching out to North Korea at some point for talks there in terms of the geopolitics and the tension between the North and the South. Let's cross over right now to our Seoul studio and bring in Bloomberg's Denny Thomas. Denny, what do we know?
Still much better than India, obviously. I'm not from India, so I'm from the Republic of Fiji Islands.
People are hoping that we are over the hump in terms of the uncertainty, and
It's basically inexistent, unless you want to go holiday. It doesn't even come into the conversation. So I'm not just picking on few countries. You see reality for what it is, you know. Don't be delusional.
has said that he's going to revive the economy. He'll try to unify the country.
Just because I'm from Fiji originally doesn't mean, oh, Fiji is the greatest country in the world. Nah,
But I think
I don't think so.
job, you will find that there are the economy is a much more tricky situation. And, you know, the whole Trump tax levies are going to be a big problem that he has to deal with. And in the campaign, he has been pretty vocal about the need to have discussion and not rush to a conversation and a deal with US. So those are the issues that Benjamin will face as he, gets
Denny
into
Thomas.
policy.
Yep, that's exactly what I thought when I looked at his face. His name is Denny Thomas.
As well. He's talked about the fact that he must also focus on making sure that the declaration of martial law can't happen again, or at least as easily.
I'm just pulling leg, man.
In terms of the
Don't
economic
take me
picture,
seriously.
of South Korea, where do we? Is it a cost of living crisis? Is it a housing crisis?
Just trying to spice things up,
What is being prescribed
as I am expected to do.
fix within that economy?
Yeah, so I think the problem has been that as the inflation shot up with other economies,
Staying in loss for so long, it's painful slightly.
They're a bit slow to bring it
Feel a
down,
slight
and that has
pain in my
that has meant that
behind
the economy
it.
has kind of gone back, and added to that, the 6 months of uncertainty has further weighed on the consumer sentiment, and as a result, as you see that the Bank of Korea last week came out and drastically cut the growth outlook to say that this year the economy is going to only grow by 4.8%. This is also taking into account the slowdown that they expect from the export front, because almost 40% of South Korea's GDP comes from exports, and with all the tariff talk that is going on, you know, the country will be one of the worst hit for one of the US's closest allies. So that is the broad picture.
Is US putting tariffs on South Korea as well? I thought South Korea was an ally.
That's because Seoul is the only city that a lot of people are migrating, and that
Samsung price is gonna go up in America.
that apart, the consumption story
I love
is down,
Samsung, man.
export story is weakening, and
Not
it's
an
gonna
iPhone
further,
fan.
get
This
worse
is
for
Samsung
US
something
as
something. I don't know what the hell that is.
That is where the big picture is.
Okay, Bloomberg's Denny Thomas, thank you very much indeed. Trying to solve the election, the new president, the challenges he faces, of course, the focus on the economy and trade conversations.
Look at my bloody entry. Right now it looks like a A support level. I shorted on the support level right now. Someone must be thinking, one of the traders must be thinking, what a bloody idiot this guy is. Look, you shorted here expecting the market to go down. You should have expected a pullback or a rebound off here and then gotten in around here. Come on, Javed. Come on, Javed. Even a basic person knows that you have to wait for a retracement, do this around this level here and then get in. Yes, I know, but when your confidence is so high on a particular move, you can get in slightly early. My trader friend, if you're watching, because as you well know that it's not necessary that the market retraces up to that level and then comes down. It can just capitulate from here, right? It can come down from here. It doesn't have to go back up. So you lose that opportunity waiting for it. Yeah, but you get a better entry, but and then if I miss it, then what? You don't get into the trade. You lose your profit for the day. Just one of those things, you know. It's just one of those things. My confidence is a bit high on this trade. That's why I got in at the support level. Otherwise, I agree. You don't get in at support. You wait for a pullback. You wait for this this pullback here, right? Comes here, you're like, oh, it's going down. You wait for this, and then you get in around here on the second or third candle, maybe, or even the second candle you get in, right? I know that. I see you. I respect that, and I didn't do it. Okay? Don't be too harsh with me, man. Take it easy. Take it easy. Because right now it'd be $1,000 in profit. Yeah, I get that. I get that. I respect your point of view. Each to their own, though. 21 minutes already. Whoa.
The news, the US trade representative has sent letters to trading partners to remind them of the deadline for tariff negotiations to conclude. The White House says the letters are a friendly reminder.
Friendly reminder, you be aware, we are going to be taxing the crap out of you.
Their best offers no later than today. Trump Media and Technology Group
tariffs is like a form of duty tax, so stamp duty, import duty tax, something.
ETF yesterday, using the name of President Trump's social network. Truth Social's likely entry to the market sees it join a crowded field of crypto offerings in the retail space, and arguably raises some questions about conflicts
Come on, man.
of interest. CrowdStrike shares dropped.
Do your
after its
thing.
Revenue forecast for the current quarter missed analyst estimates. The stock fell as much as 6% in extended trading.
Why are you wasting my time?
earnings expectations last
You know
month.
you're coming down. Why are you holding
Aiming
here?
to generate $10 billion
What do you
in
expect to
annual
achieve, mate?
recurring revenue.
There is no way but down. There is no way. Believe it. You need to believe that there is no other way but to come down for you.
To buy over 1,100 megawatts from the biggest US nuclear operator starting in mid-2027.
Believe and you can achieve, my friend. Believe and you can achieve. Trust me. Just come down. Just come down. Stop fighting. Why are you fighting the inevitable? Don't understand this. What's the point of this? Who's this guy? Lars who?
Wednesday, the initiative is part of a larger strategy by Chancellor Friedrich Merz.
Chancellor? Oh, it's German.
Let's check in on the market.
Is the Germans are the biggest players in the European market, so the euro dollar, I have to be careful of what they're saying.
Despite the fact that those additional tariffs have come into place on
What accent is this?
rates from 25% to 50%. Those Trump tariffs on metals are now in place. FTSE 100 futures pointing to modest gains of 0.1%. S&P futures after a solid day yesterday for the S&P 500 and the Nasdaq currently flat, range bound, similar picture for the Nasdaq 100. Coming up, we're going to join Pretty Gupta live at Super Return in Berlin. We're going to be speaking to Permira Credit's David Hirschman. This is
Something. My lens is obstructing my view for some reason. Not for some. What reason? For some reason. Why'd you say that? Why are you speaking intelligent? Intelligibly? It's illegible. I gotta brush up on my vocabulary, guys. Haven't used it since my last professional job, which has been years and years. Haven't read a book in a long time. That's why I guess my speech is so all over the place. Because you build your vocabulary and practice by reading books. So because I'm on the charts for like 12-14 hours a day, it's extremely difficult to read books because my eyes just give up, you know. I start getting migraines because I'd like to read books, but just need to give my eyes rest. It's not the same when you listen to an what do you call audiobook, but when you read the book, a physical book, it's different. Yeah, it affects your memory in a different way. You're able to retain a lot of themes and words and stuff much better than in an audiobook. For me, I am able to. Okay, I haven't done a study on this, just personal experience. Your situation might be different. It's just holding at that level. Look at my entry, man. Right now it looks pretty crap right now, but soon, in a few more minutes, it's gonna look like a bloody genius move, like someone who's a high-level scalper. You're like, how'd you know it's coming down? Educated guess. What? UK secures an exemption. Narte. $340 in loss right now.
Withdrawing its 2029 to 2030 guidance. We know, of course, the tariff impact is proving a challenge for drink makers. Generally, the China story, as well as the consumer remains challenged in that key market, has also been a headwind for some of these companies. We'll continue to keep across that story for you, but that is one to watch at the open. Remy Cointreau withdrawing their 2029 to 30 guidance. European markets looking to build on the modest gains of yesterday, up 0.3%. FTSE 100 futures currently flat. We have the ECB decision, of course, tomorrow, expected to cut another 25 basis points. US futures currently range bound after a decent session yesterday, closing high by around 0.4% on the S&P 500. Currently just flat for that index. Nasdaq 100 futures after a decent gain as well yesterday, currently pointing lower by 0.8%. Let's briefly check in cross asset. The treasury market's relatively stable.
Guys, if you get bored during the middle of this, you can just skip to the end and see what happened, see the outcome. Don't worry about watching the whole thing if you get bored. Yeah.
Is the next one to watch on Friday. 444 on the benchmark 10-year. Euro dollar at 113. Copper in focus on the steel and aluminium tariffs, because we know the Trump administration is also considering potentially levies on that metal, up 0.8% in the session today. And
forming resistance. Forming support at that level there. I have to open my mouth when I speak so that the words come through. Otherwise it gets stuck. I got to do some speech therapy for myself. Crete?
Tom, thank you so much.
There's so many Indians on Bloomberg. Where?
In these markets, we talk about where investors
Crete?
want to allocate. The United States or Europe. And right here in the heart of Berlin, we are there having that exact conversation, allocating to
Are you in the heart of Berlin? And what is happening in the prime markets? Please tell us, Creddy. Oh, in profits now.
From Permira's credit team, the co-head there, joining us this morning. The firm as a whole overseeing about $90 billion in terms of AUM. He himself, $20 billion.
AUM means assets under management. So it's a fund. Ooh, here we go. Here we go. Ladies and gentlemen, boys and girls, hold on to your hatties. Keep going, keep going, keep going. This is nothing. This is nothing. Better push, 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 push. Push, breathe. Push, now push. Push, yes, that's it. Push, push, push. That's it. Nice and slow. I mean, push. Push. I can see the crown. I can see the crown. Push. Push. Yep, yep, yep. It's coming, it's coming. Well done. Breathe, breathe. Come on, come on, come on. It's going back in, going back in. We might need to perform a cesarean. Please push, 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 push. Come on, you can do it. You're a strong market. You can do it. Push, 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 push. Yep. Come on, push, push, push. That's it, that's it, that's it. I know it's hard. I know it's hard. Take a few breaths. Take a few breaths. And give one final push. One final push. Come on, you can do it. Give us one final push. Yep, yep, that's it. That's it. Push, 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 push. That's it. That's it. That's it. You can do it. You can do it. Push, 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 push. Oh. Don't let me do a cesarean on your ass. I will. Come on, man.
And delivering the stability, the yield, especially investing in credit. We're not looking for, equity upside. We're delivering a constant yield year on year. And over the last 18, 20 years, we've been through a number of periods of volatility.
Oh, so close. My entry had been slightly better. Now it's pushing up again, which is silly. It's not very nice. That's not very nice.
And I think that's what investors see now as well.
Come on, man.
With the downside protection versus the US, slightly
That's
better
not
yield in
very
some
nice.
cases, and just more
Come on,
certainty and
come on.
and
Still got a little bit in you.
Fascinating.
Still got a little bit in you. Don't play games. Don't play games with me. Not in the mood. I'm not in the mood. Alright.
Opening up. It was supposed to happen in 2024. It got pushed to 2025. Before we get to the dynamics of the credit space specifically, is there any indication from your vantage point of when the capital markets are suddenly going to be
How many minutes has it been?
Yeah, that's obviously that's the key question, and that's what everybody's wondering. What's interesting is that
33 minutes. Oh man, I could have closed it. No, it's gonna be a long one. It's gonna be a long one. Might be a long one.
The flip side of that is when there is less organic growth in a slower growth environment, value creation in sponsor-led transactions comes from M&A activity, add-on acquisitions. So we find that there is more M&A activity in the buy and build, the bolt-on acquisitions.
It's coming down. It's just gonna range here for. I mean, it could just come back down again right now, but could just hold here for another few minutes before it starts to make its way down. Never really know how exactly the market's going to behave. You just have an idea of the general direction it's going in.
It's fascinating. I think we're all waiting to see when that happens. I think the New York Stock Exchange President Lynn Martin had then pushed that back to the timeline back to the back half of the year. We'll see if it gets pushed back further.
Yeah.
This is now your time to shine in the credit space here. There are warnings across the board from the likes of Jamie Dimon, Connie Johnson at EQT, saying that private markets are, well, not private markets, but private credit specifically, are unregulated. They're a little bit of a gray area. They're kind of taking over perhaps the lending capacity that the banks had, say, 10 years ago or so. Walk us through what that looks like for you. Is private credit something we should be worried about?
So what's interesting is totally agree with the point you're making that private debt has replaced bank financing in the traditional sense, and especially in the mid-market in Europe versus 10 years ago. That's definitely the case. Now, whether there is a systemic risk and something to be worried about, one thing I don't agree with is that the industry is not regulated. It's a highly regulated industry. There is a lot of transparency from private debt managers and private asset managers in general with their investors. These are private transactions, but there is a lot of information shared with our investors, and that's true not just for us, but generally in the market. And then on to the systemic
Like I said, it's holding in that range right now. So
systemic risk between the private debt players among themselves.
it might take another few minutes for it to start coming back down again.
Disappear from the market because they struggle to raise a new fund. That does not affect the other players in the market.
Very quickly, I'm going to put you on the spot. What does that red flag look like? At what point do you get worried?
Well, we get worried when people lower their underwriting discipline and start to deploy a lot of capital without doing due diligence. Because they are under pressure to deploy, and in particular, this may be true for publicly listed companies. If it's an AUM game, their objective, number one objective, is to deploy capital to grow their AUM because that's what their shareholders want to see. That may be at the expense of a good credit underwriting discipline.
All right, David Hirschman over at Premier Credit joining us in Berlin this morning. Tom, it's a fascinating conversation here. This is what we're talking about, the core of it.
Might go back up to touch that level again and then come back down.
Trade, but those capital markets and whether private credit is still the golden child
biding
of private
time.
markets. Back to you.
Yeah, excellent questions, and of course, a great conversation as well. Plenty more coming up as well. Bloomberg's pretty good on the ground for us at Super Return.
My entry could have been better, you know.
As I mentioned, we have plenty of big interviews still to come from that event, including Jim Zelter, president of Apollo Global Management, Joanna Scarf, head of European private equity at Neuberger Berman, Thomas Nides, vice chairman of Blackstone, and Connor Teskey, president of Brookfield Asset Management. So some fantastic conversations still upcoming live, of course, from Super Return in Berlin. Let's bring you some updates.
Come
now.
on.
Some breaking news. This is a Bloomberg
Give it a strong push down, man.
Airbus China considering placing orders potentially between 200 to 500, potentially up to 500 Airbus jets when European leaders are in Beijing in July. This is Bloomberg reporting. The conversations between Beijing and its European partners and Airbus are apparently ongoing. Nothing is certain yet, but the reporting suggests that this could be an offer, could be a deal that would come to the fore during that visit by key European leaders to Beijing to mark 50 years of diplomacy. So Airbus could benefit from orders between 200 and 500, both narrow-body and wide-body aircraft. And of course, this could also be an opportunity for President Xi Jinping to make a pretty clear message on trade to his US counterparts, President Trump. Of course, Boeing has been challenged in the Chinese market. So watch Airbus at the open. This is a Bloomberg scoop on orders of between 200 to 500 jets by Chinese airlines, potentially in the offing when European leaders visit China in July. Now, some other stories making news this Wednesday. Virgin Australia, talking of airlines, is reported to have set
Virgin Australia
at $2.90 a share. That is according to the Australian Financial Review, which says the company is planning to raise around $440 million. Private equity firm Bain Capital bought Virgin Australia in 2020 following its collapse at the start of the pandemic. Toyota Industries shares slumped after the Japanese company revealed a $33 billion bid to take it private. The deal would rank among the biggest buyouts on record, but investors and analysts are arguing it significantly undervalues the company. The privatization would give Akio Toyoda greater influence over the automaker founded by his grandfather. Volkswagen is planning to reduce its German workforce by about 20,000 employees.
Traced all the way back, man.
Europe's largest car maker is restructuring in response to rising costs, weaker European demand, and increased competition from Chinese car makers. In December, the company struck a deal with unions to slash production and reduce headcount by 35,000 by the end of the decade. Coming up after the UK announces
a bit tricky,
an on munitions production capacity, we'll ask how the country can fund its increasing defence aspirations.
I don't know about this one.
Next. This is Bloomberg.
It's a strong reaction. It's a strong reaction of that level. Shiva. I still think it's coming down though. Still think it's coming down. Entry could have been much better.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names.
Okay, guys, I'm gonna do a special trick right now.
I started to study
I will not
sports like
recommend
an 11-year-old studies baseball statistics.
you guys
and I got
do this. This is one of my other accounts that's on
Susie Wolf.
When you're competing, you're not thinking about
copy trade.
any fear
Then I'm
or any
closing
worries
the
of what
copy,
could happen.
turning it off.
Josh Harris.
You can't do a good
Copy
deal
trading
with
on
that
this one.
person.
Jay Batt.
At the end of the day, there's never been a better
Alright, here we go.
And more. Stay tuned.
I'm gonna add to the existing short. I've added another position. Now you can see two positions up there. And that's because I believe it's gonna melt from that point right now.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This, I only do this if I have strong bias on a trade. I don't do this if you know, on a weak trade like that. But this is a great opportunity to kind of make a decent payout for this one. Decent earning, decent profit. Wouldn't recommend it if you're a novice or you don't know what you're doing. Doubling down like this is a bit tricky. Have to be careful.
Yeah, and I don't think you would have ever had any kind of shift on this scale had basically Trump not threatened to do that. And I think that that's something that most European leaders here acknowledge. And, you know, the question is whether or not these European leaders are going to, in fact, hit that 5% target. If that is going to be the formal commitment put forward by NATO in saying that this is basically what we're willing to do here on the European side in order to guarantee continued support from the United States. And we already have from our reporting where we understand some steps in that direction. We understand that the European air defense capacities, we should say NATO defense ministers are meeting tomorrow in Brussels to discuss this very plan. They want to quintuple their air defense capabilities over the next few years just on the European flank of NATO. That is one of the initiatives that puts us on that path towards that 5% figure. And we should say Mark Rutte has openly talked about that 5% figure. We have Friedrich Merz here in Germany who's basically committed Germany to that 5% figure. And in fact, Marco Rubio, last time he was in Brussels, talked about the United States committing itself to that 5% figure of NATO defense spending. We should say that about 3.5% of that would be traditional military spending. Another 1.5% of that is a bit of a fudge. It would be infrastructure that supports military spending, so like roads and cybersecurity, trains, for example. You know, Germany would be a big through way to try to actually move that hardware. You need roads and trains that can carry that kind of equipment. And all of this, Tom, as you say, now that we have the formal commitment from the White House that Trump will be arriving in The Hague in what feels a little bit, Tom, like an audition for NATO, for the Europeans saying, hey, listen, we're still relevant. Please continue to have our back. Here's what we're willing to do.
at the time, of course, when we were reminded of the political divisions in Europe, and notably, of course, in the Netherlands, where the Dutch government, of course, collapsed yesterday after the far-right lawmaker Geert Wilders pulled his Freedom Party out of the ruling coalition. Let's take a listen, and we'll get back to you, Ollie.
In recent days, I have repeatedly informed all four party leaders that, in my opinion, the fall of the cabinet was unnecessary and irresponsible. We face significant national and international challenges, and decisiveness is required more than ever. This is crucial for the security of our resilience and the economy in a rapidly changing world.
So hearing there from the outgoing Dutch Prime Minister after the coalition partner, of course, Geert Wilders, pulled his party out of the coalition. That was the Prime Minister now in a caretaker capacity as they lead up, of course, to elections in the Netherlands. Ollie, what happens next for the Dutch government? What are we watching for next? This is all about the build-up to the vote, and what is the split likely to be going forward?
Yeah, so listen, Tom, when you look at the sort of polling right now in terms of what the anticipation of this next government would be, you still have Geert Wilders, the Freedom Party, the sort of far-right, anti-Islam, anti-immigration party, still polling over at number one. But what I think is really interesting is when you look back kind of historically at what's been going on with the Dutch government, this is a place that has been very, very politically unstable. You had an election back in 2021. It took 300 days almost, 299 days to form a government, and that government held until 2023. That government then collapsed. 7 months went by to form another government, and then that government held this latest one for only 11 months and then collapsed.
Should start
again. But again, Tom, the important
coming down
context
now
is
over
what
here.
we've not had over the last couple of years
Should
is
start
this
to
kind
come
of
down.
situation in which the Europeans need to show some kind of solidarity.
Do a sharp
They're 3 weeks away from this NATO meeting, which
dive down.
into the host country, the Netherlands.
Guys, I'm
and 5 weeks away from a
feeling the stress right now. Two lot sizes in. I mean, two sets of two trades in. It's a bit heavy on the shoulders, so I'm feeling it. So I can't speak too much. Excuse me.
Is considering a Ministry of Defence request to back NATO's proposed new military spending target of 3.5% of national output by 2032. If accepted, it would be a major test of the UK's already stretched public finances. Of course, I'm joined now by Bloomberg's Caroline Hepker, an anchor on Bloomberg Radio, who's been digging deep into the defence story of the UK. Caroline, thanks for joining us on set. You've been doing some fantastic reporting, worth reading on the terminal and online as well. Can the UK meet its requirements, meet these commitments? Where do we stand in terms of defence capabilities?
We are a long way off 5%.
Rarely ever do this, guys. I rarely ever
on its military. The government is committed to
do
2.5% by 2027. 3% is only an ambition,
another
according to the
entry.
Prime Minister, and by 2030
So
before the end of the next parliament. So 5% by 2032
should get out quickly.
is an enormous task. I spent the last month speaking to defence primes. These are the biggest contractors here in the UK, to SMEs, to think tanks, to some former military chiefs also about the enormous challenge. Britain has been slashing its military spending over the decades, basically since a peak in the early 1950s. There was a huge cut in 2021.
Yeah, because they don't have the money to support their defense system, and created a strong ally in US. They don't need to have massive military. Well, now with Russia, they have to reignite that, I guess.
He talked about the cupboard being bare when it comes to UK weapons, and that the hollowing out has been catastrophic.
It's not looking good right now.
How do we make up that ground? Enormously difficult political decisions to be made. As part of the reporting that we've done, I went, for example, to see a factory making munitions in the north of England for BAE Systems, which is
Up till the Russian war on Ukraine, the UK was pretty safe, so it didn't need to have a strong military. It could divert its resources elsewhere. But now with Russia becoming a significant threat, the UK is backpedaling right now.
The welfare state. Voters say that they want more security and they're in favour of greater defence spending. They don't necessarily want to pay for it. And the government is now really in a very, very difficult spot. Does it increase borrowing? Bloomberg
Yeah.
Economics says that it
GoFundMe,
have to potentially
UK Army.
kind of demand. That would mean running the gauntlet with bond investors, or do they choice with voters and have to tell them they have to raise taxes.
Okay, the ambition there, the gap is needed to be closed, and it is huge. The reporting is excellent and a deep dive and well worth your time as well. Bloomberg's Caroline Heck there, of course, on Bloomberg Radio with a focus on the UK defence challenges and the need, of course, to close a sizable gap with that on-the-ground reporting. There's plenty more coming up. Stay with us. This is Bloomberg.
It's coming down, but very slowly, very cautiously. It should melt from there, but it's just holding. It's scaring the crap out of me. Why are you scaring me, mate?
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Listen carefully. When you hear in the markets, not just in the syncopation triggered by inflation, but in the preludes leading to global election, in the dissonance that moves the needle.
Breathing deep helps with stress. Oh man. Should have done a dump there, man.
Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Inside with Haslinda Ahmed, only on
Come on. Come on. I'm in with 2 positions right now, man. Can't do this to me.
Stateside yesterday was positive in terms of job openings, coming higher than expected, in fact. So 7.4 million additional openings, and hiring actually picked up. If you're looking for a fly in the ointment, maybe look at the quits rate, maybe look at the number of layoffs as well that climbed to its highest since October. That takes us, of course, to Friday when we get the non-farm payrolls data, which will round out the picture in terms of this labour market. Estimates coming through from the Bloomberg analysis suggesting that you could see a slowdown in terms of non-farm payrolls from about 180,000 to about 130,000, with the May data dropping on Friday. Let's briefly check in and give you a preview of the services story stateside as well. So we get the ISM services data out later today. You're expected to see a modest improvement with a focus on leisure and hospitality. You could see a bit of a tick up. 52 is the number that's being forecast, an increase for the month of May from 51.6 in April. Bloomberg Economics say part of that is down, of course, to the reprieve that came through from those additional China tariffs. 90-day reprieve. We're counting down to the end of that, of course, and the trade tensions are still there. So going forward, there's still a lot of uncertainty, but maybe you might see a bit of a pickup in terms of leisure and hospitality when it comes to the services sector of the US. That data dropping later today. Now, a reminder, we have got some big interviews still to come from Berlin. Super return, of course, back on the rounds in Berlin. Kriti Gupta is there. She's going to be speaking to a number of big names within that space, private credit, private equity, including Apollo President Jim Zelter. That is coming up later. The opening trade is up next. This is Bloomberg.
Currently lost for words, guys. Don't have much to say right now. Market is oscillating in that range there between my take profit and my entry.
From when you're cash flow negative and you're operating off of equity raises in the past to when you're self-funded and you're
Not
cash
very
flow
nice.
positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the costs as long as we're being efficient with what we allow our cost growth to look like.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETFs
Just ranging there for so long.
on Bloomberg.
Good morning from London. I'm Anna Edwards alongside Lizzie Burton. We're an hour away from the opening trade. Here's what you need to know. Donald Trump raises steel and aluminium tariffs to 50% in a bid to boost local manufacturing, but raising tariff concerns. The UK is exempt from the higher rates. US job openings pick up, boosting stocks, but a lack of rate clarity means traders are increasingly betting on a wider range of Fed outcomes. Plus, the Dutch Prime Minister hands in his resignation, setting the stage for a snap election after far-right leader Geert Wilders pulls out of the ruling coalition.
A very good morning, Anna. Checking in on these markets, and the optimism around that better-than-expected US JOLTS data is offsetting the negativity around that OECD growth downgrade. It was better than the Street's view anyway, and it's powering stocks in the Asia session, powering European futures. Wall Street's already had time to digest it, so futures just flat there. But traders continuing to price in 2 Fed cuts this year, so the dollar recovering somewhat from its lows. Euro dollar therefore on the back foot. We're at a 113 handle as we head towards the cash session here in Europe and the countdown to the opening trade.
I'm trading the euro dollar actually, so she's commenting on it. Yeah, it's on the down, it's coming further down. The dollar is strong. Yes, that's why I'm shorting the euro.
Welcome to the program, everybody.
But right now, I'm just in the scalp. Oh crap.
A host of data points and events still
Come on,
this
man.
week. Non-farm payrolls looms large on
Give us a
Friday.
dip.
Before that, we get an ECB rate decision. We've got the German Chancellor over in the White House. All of these could be hugely newsworthy events, Lizzie. So that's the week ahead, if you like. But in the moment, we need to focus on the fact that, well, markets are not really going anywhere right now. We might see a bounce at the start of trade today, but US futures pretty flat. What's the latest news flow, or one of the elements there is trade, of course. 50% aluminium and steel tariffs now implemented by the United States. 25% was not enough, it seems, according to President Trump. He's citing national security and defence reasons. The UK gets an exemption, at least staying at 25% for now. So a lot of conversation about where this goes. And meanwhile, companies are working out how to manage all of this. Remy Cointreau...
How to work around it, you mean?
Yeah, as we discussed yesterday, Trump always chickens out. All well and good if you're in financial markets, but not so if you're a business and you need to think about how it affects you going ahead. So we're seeing that from Remy Cointreau. You mentioned the UK exemption from these steel and aluminium tariffs, perhaps vindicating Keir Starmer, the UK Prime Minister, going early when it came to the UK-US Trade Pact and actually managing to get this carve-out where we were kind of wondering whether he would, because of course the president is so tied up with the court ruling, but alas not, and good news for the UK. So the rest of the world, though, facing these tariffs as of 5:01 a.m. London time.
And then, of course, the uncertainty continuing around
Come
China
on, just give a
and
quick push
the
down.
EU and their two relations with the
Quick
US.
push
So
down and
the
we're
back and
out.
forth continuing,
Won't
but
have to
still
see
no
each other
she
again. We won't have to
calls,
talk each
although
other,
the US
talk to
seems
each other
optimistic that one is on the cards.
Right, yes, and this is
for the
crucially
rest of
something
the
the
day.
market is looking for. We had a conversation
I'll leave you
yesterday
alone
with somebody with Trump
in peace.
first term experience who was telling
Just
us
give me,
that when these
give
two
me what
people
I
get on
need,
the phone
and
and talk
it's
to each other, real
done.
progress can be made, but we don't have
Why
any
are you
confirmation
holding
if
out?
that is going to take place. In the meantime, you nodded to this a moment
I
ago.
believe in you. I
We've got
put
the
2
Revy
positions
we've
on
got
you,
Revy
man.
trying to deal with the trade tariffs that are in
Give
place.
it to
We've
me,
got
baby.
aviation trying to deal with all of the
I mean,
back and forth on
that
tariffs as
didn't
well.
sound
And
right.
here we see an interesting report by our colleagues at Bloomberg. China is considering ordering hundreds of Airbus jets in a major deal. And once again, this ties into our top agenda item this morning to tariffs, because of course the tensions between the United States and China perhaps made a deal around Boeing planes a little bit less likely.
Yeah, and this
As
just
you can
shows
see,
the
guys, it's just ranging in
China and
this
the EU, perhaps,
between
as
my
the
take
US
profit and
China,
my entry.
are coming
It's just
to blows,
ranging
it
here,
seems, again,
which
over many things, not least
it's
the
just
Chinese
very
student
tiring.
visas, but also the
And I've got
lack
2
of
positions on there,
exports of
so
critical minerals from China to
it's a
the
bit
US, which
painful
is
as well.
disrupting
It's
Washington's
quite
spending.
painful
But
actually.
look, all of that tariff uncertainty continuing.
Got double
What we're
pressure on
waiting
me right
for
now.
on sentiment today in the market is the US economic data, and we've been waiting for the cracks to show in the hard data to stop this US equity rebound, but it's not come from the JOLTS data. Better than expected yesterday.
Absolutely, better than expected. So that provided a bit of a boost for US stocks during the session, and there could be more of that to come for European markets this morning. But looking at US futures, they're pretty flat, aren't they?
Why
So
are you
we're not
holding
sure
out,
what's the
man?
catalyst after this. But for the moment, the Fed's view
What's your
around
problem?
jobs stays in place. The jobs market looks pretty resilient.
Don't
At least
have to
that's the
be
top
like
line
this.
of those JOLTS numbers. Bloomberg Economics, though, does have some words of caution. If you're looking beneath the hood, they're saying, okay, so you've got higher job openings, but there was weakness in certain areas of the market where you would expect to see pullback if the economy was slowing. So, for example, hospitality and leisure and travel and the like. They also saw an uptick in layoffs, and the number of quits came down as it became.
Should take 3,000 from you
And as you say,
today.
the top line is that the labour market
You know,
is
I'll
resilient
take
for now, but
3,000.
it's not just economists who are
You're
pressuring
being
it,
naughty.
it's also the market. So if you see that resilience
Being
vindicating
naughty.
the Fed and its hold rate steady
Being
position,
silly Billy today.
actually, if you look at the options
I'm gonna take
market,
3,000
many
from you.
taking out bets, taking out protection on a whole
Because
host
you're
of
being
possible
silly, that's
outcomes.
why.
Yes, the market's currently pricing
Can't be
2
silly
Fed cuts
like
for the
that.
rest of the year, but
If you be
many
silly, I'll
seeing,
take more money out
no
of you.
cuts at all, some seeing
know?
half-point cuts in
If you're gonna
2025.
act
So
like that, I'm
anything
just
could
gonna
happen.
Yeah, absolutely.
take a
And
little bit
anything
more
could
today,
happen,
okay?
trades is exactly what we're seeing
And
being
you-
priced in by those who are hedging their exposure around interest rates. So really interesting to watch how that develops. And
Alright,
what
I'll have to
has
manually
been
close on my
referenced
other
in our
accounts as well.
headlines. Now, where we have, so we're not seeing
See,
much movement
see,
in
don't be
US
silly.
futures. Where we
Don't
have
be
also
silly.
not seen much
Do you want me to
movement
take
is in
4,000 out of you?
Dutch bonds, and that's on the
Do you
back
want
of
me to
the
take
news
4,000 out
out
of
of the
you?
Netherlands. We covered the
Stop
run-up to
pissing me
this
off, you know
yesterday
me.
during the programme, didn't we? When
You
we
know
heard from
me.
Geert Wilders that he was pulling out his Freedom Party from the ruling coalition.
Alright.
But now we've heard from the Dutch Prime Minister, and he's resigned.
Come
So
on,
Dick
give
Schoof
us a
has now resigned. He's going to become
3,100
the
here, and we
caretaker
are
leader of the
3,100
Netherlands. Snap
guys.
elections being called. And interesting that we saw no movement in Dutch
32,
bonds because a
boom,
couple of voices
boom.
in our reports
Okay,
this morning saying
3,200 there
that
for
we've got a
today.
caretaker government, they're just not going to
I'm just
do
gonna
very
manually
much, and
close
as a result,
this
the market
because
looks nervous about more taxing and spending.
Yeah, the AEX
and
taking a little bit of a knock,
yeah.
but recovering yesterday. So
Alright,
again,
alright,
the market
alright.
reaction pretty limited to this
Alright,
yesterday.
alright,
I had an
alright.
interesting conversation with Ros Matheson,
There you
our
have it,
EU
guys.
director yesterday, talking about
About $3,200
Europe and whether
we made on this trade. Just got out at this level here.
is stronger.
Because I went in with my second position at the top here, so I was able to come out with 3,000 at the bottom here. So well, that's it for this video. Thank you very much for watching, and I'll see you guys in the next one.
Rule by nationalists mean for the coherence